Hey, good morning, everybody. Welcome to the Mortgage Rate Forecast with Scott Criss, your mortgage rates and news. It's June 9th. Let's get started with some charts. Look at this, guys. Wow. We are currently trading at $103.09 this morning. This is the best that bonds have actually traded since February 3rd of 2015. So really nice climb for bonds. We're looking at support coming in below us now. Look at this trading range. Look how sharp of an angle this is. We're looking at support coming in below us first at about 103. If we were to break through that for some reason, we may fall as low as 102.75. Our resistance is above us. Guess what? You can't see it because I can't fit it on the chart. Our resistance was 103.40. I actually had to go back to the charts in 2015 to figure out where our next resistance level would be, and that's about where we capped out at back in February of 15. So it looks pretty darn good right now. Reports came out, and the funny thing is unemployment came in better than expected, which really was not a bond-friendly report. As far as news, labor market does seem pretty healthy, but Yellen's coming out saying, I still have my concerns. So pretty clear that Yellen's not going to increase the short-term rate here in June, but we could see it later on. So bond-friendly news as far as that. And it still goes back to the overall data. May was still the worst hiring month in our economy in 6 months. So that is really not good news. Even though the unemployment is coming in better than expected, still that's lingering in the background, guys, and it's making investors a little worried. So they're piling their money from their stocks to their bonds, and I think that's why we're really seeing some decent trading here. Plus, once we broke through 103 yesterday, a lot of orders, a lot of buys are automated. So if you're an investor, you might say, hey, I want to buy these bonds if they break 103. And so we saw a lot of automated ordering once we broke that 103. So let's be cautious, but right now it does look pretty darn good for bonds. To kind of quantify where we're at, Freddie Mac, the source is down here. Freddie Mac reported the average interest rate was 3.6% at 0.6 points. And we averaged trading last month at about $102.40. So to kind of quantify this for you, if we're now trading at 103.09, that means we're better by 69 cents, right? And so if the average consumer was paying 0.6 points and now we're better by 69 cents, what that really means is, the average consumer right now is probably going to receive a rate right around 3.6% with no points. So that's the scoop. Those are the averages and kind of where we're at. Now, let's get to the forecast. The analyst outlook is pretty consistent. All the analysts, well, I shouldn't say all, the main analysts that I follow, they're really going bullish on the short, meaning over the next couple of days, they really think that mortgage-backed securities are going to trade pretty well. So where they're inconsistent is on the long term, 30 plus days out. One analyst is going a little bit bullish, and the other one's definitely staying neutral. So again, bonds exceeded my expectations from my Tuesday forecast by 9 cents. And so it was good news. I hate to be wrong, but I like to be wrong if bonds are better. So here's what I'm going to do. I'm going to go ahead and forecast trading to be between 103 and 103.20 until this coming Tuesday. So let's see how I do, but tell us what you think. Leave your comments down below and let us know what you think is going to happen with mortgage-backed securities. Do you think they're going to improve? Do you think they're going to get worse? We'd love to hear from you guys. So if you can, before you leave, don't forget to like the video. Everything likes to be liked. So does this video. And as I'm sure you're aware, if it's your first time on the page, top left, you can hit subscribe. You'll get little alerts on Tuesdays and Thursdays when the videos come out with the forecast. And if you're really not sure what the heck this all meant, like what are these bond charts? If I'm getting a 30-year fixed mortgage, how come the rates are always going up and down? And, what do these charts mean? It's confusing. It's okay. Up here at the top right, you can click this link and it'll take you to Mortgage Bonds 101. It'll teach you the fundamentals of how mortgage-backed securities trading directly impacts you as a consumer getting a mortgage and what kind of interest rate you're going to receive. Anyway, that is it. It's Thursday. We'll talk to you guys on Tuesday. If we don't speak, have a great weekend. Bye-bye.